Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Wednesday, Hump Day, and October 20. Oh boy, I have to kind of think about this. October 24th. And we do got a couple of economic news releases scheduled for today, so we'll jump right into it. We had the Market Flash PMI. This is the Purchasing Merchandising Index, which is basically kind of gauge where we kind of look at where the economy is moving and stuff. So this is kind of important. Uh, Release here. We had 51.1 back in September. So remember, anything above 50, a lot of these indexes means that there's expansion. Anything below means that there's contraction, that things are getting worse. So it did uptick it slightly up higher, so which is a good thing. Obviously, we want to see that going upwards. So things are looking slightly better, even though it's kind of on the edge there of the orders and stuff. Next item to know is new home sales for the month of September. So back in August, we had 368,000 new home sales, and we figured there would be a slight uptick for September, and we did. So we came in pretty close to where the estimates were forecast, and this is the highest since we've had since 2010. 2011 was actually a pretty bad year, but this year is showing a little bit better. So some housing showing some resiliency so far this year. But last but not least, the Fed wraps up their meeting today at about 11:15. They'll be providing their 15 on Pacific Standard Time. They'll be providing their statement, so the markets will be kind of gearing up for that this morning, and so that will create the volatility in the markets. So far this morning, the stock markets were up quite a bit, and they've kind of pulled back now. So it's a little bit mixed. The Dow was up around in the 50s. Now it's pulled down to around the 20s. Nasdaq and S&P are about even. They're all up, and now they're about even or par. And so we'll see. A lot of it also came in is we had the earnings, but we also had earnings on Facebook, and Boeing came up, so that's kind of helping the stock market so this morning, and then a decline in the oil prices. So oil prices are down to about $86 a barrel right now, so nice sign right there. There's also showing some improvement in the Chinese flash PMI. So they're still showing a contraction, but less contraction, and maybe they're thinking maybe they might have a soft landing. So that was kind of encouraging news. But on the discouraging news, we got Germany showing some signs of a slowdown. So their PMI actually is showing worsening by some pretty big jumps from like about 1.5%. So that's something to watch out for. And Germany is important primarily because it's Europe's largest economy over there, and that's where the euro is based off, is out the German Deutschmark. So to be cautious over there. So let's go ahead and see what everything translates to interest rates today in the bond market. We're starting off down, so we kind of closed up that gap we talked about yesterday. We did end up downwards yesterday, and we're down again. So right now we're at 104.47 at 9 point down below. So we're nearly 20 points off. So we do have a pricing for the worst today. Anything above 12 basis points, you'll see price changes typically. And if it's towards late in the day, sometimes they'll reflect that the next day in the pricing. All right, so today bond prices so far this morning, this could change once the Fed gives their statement later on. But so far this morning, the interest rates have crept up a little bit, so pricing's worsened a little bit today. All right, folks, thanks for stopping by. You guys have a wonderful day. If you guys like to receive these on a daily basis, please stop by the mikesdailymarketreport.com, and you can subscribe, and you'll be emailed every day these reports. Thanks again, and I will see you guys tomorrow. Have a great day.